Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Monday, March 20th, 2023. Signature Bank's 48 branches will be operated by Flagstar Bank as of March 20th. Flagstar Bank is a subsidiary of New York Community Bank Corp, and they bought Signature's deposits and loans just a week after Signature collapsed. The U.S. Federal Deposit Insurance Corporation has approved the agreement, which will transfer $38.4 billion worth of non-crypto-related deposits and $12.9 billion in loans to Flagstar Bank. However, the deal does not include any crypto-related deposits. Starting March 20th, all 40 branches of Signature Bank will operate as Flagstar Bank. The deposits that Flagstar Bank has acquired from Signature Bank will continue to be insured up to the limit of $250,000. Signature Bank's digital assets business holds around $4 billion in deposits. It was not included in Flagstar Bank's takeover deal. Instead, the FDIC will transfer these deposits directly to customers who have a digital banking account. They said, quote, "The FDIC will provide these deposits directly to customers whose accounts are associated with the digital banking business." So the $4 billion held by Signature Bank's digital assets business represents 4.5% of the total deposits. That's 4.5% out of $88.6 billion as of December 31st. Now recently, Coinbase, Celsius, and Paxos have confirmed that they have some exposure to Signature Bank. A report from Reuters on March 17th suggested that any buyer of Signature Bank would have to divest any crypto activities as part of a rescue program. And as we reported here, an FDIC spokesperson denied it. Well, now, we not only know they were dishonest, we know why. This takeover deal happened after the FDIC created the Signature Bridge Bank on March 12th. That was after the New York Department of Financial Services closed Signature's doors for good. And it was the Department of Financial Services that appointed the FDIC as the bank's receiver, which is a pretty slick move by the FDIC. By handing the transfer of crypto directly, by working directly with the depositors, they cut out that crypto business from the banking sector. They're not replacing the service vendor, just as they're doing with the non-crypto side. No, they're just nuking it from orbit, which means there's no continuity of that business. That business is just gone. And they're doing so under the guise of protecting crypto clients, when really they're just attacking crypto. The Federal Reserve of the United States is working with 5 other central banks. Their goal is to keep the US dollar flowing. Now, obviously, there's been some issues, some banking problems in the US and Europe recently. On March 19th, the Fed made an announcement about this effort, and this was just a few hours after Credit Suisse was bought out by UBS. The purchase was part of an emergency plan by Swiss authorities. The goal of the plan was to keep the country's financial stability intact. That purchase cost $3.25 billion. The Federal Reserve made a statement. They want to improve the effectiveness of the swap lines. These lines provide US dollar funding. The central banks offering US dollar operations will increase the frequency of 7-day maturity operations. They will do this from weekly to daily. The Bank of Canada, Bank of England, Bank of Japan, European Central Bank, and Swiss National Bank will all be part of the swap line network. This will start on March 20th and will continue until at least April 30th. Now, the Federal Reserve didn't mention the current banking crisis in their statement. Instead, they talked about the swap line agreement. They said they implemented it to strengthen the supply of credit to households and businesses. The swap line network among central banks is a set of available standing facilities. It serves as an important liquidity backstop. This helps ease strains in global funding markets. It also helps mitigate the effects of such strains on the supply of credit to households and businesses. The latest announcement from the Fed has caused a debate. People are wondering if the arrangement constitutes quantitative easing. Economist Danielle DiMartino Booth said that it is unrelated to quantitative easing or inflation. She said that it does not loosen financial conditions. The Federal Reserve has been trying to stop the banking crisis from getting worse. They set up a funding program last week. That program is worth $25 billion. and its goal is to make sure that banks have enough liquidity. This is to cover customer needs, because liquidity has been the real problem of late. Several economists have analyzed the collapse of SVB. They found up to 186 US banks are at risk of insolvency. Even if only half of uninsured depositors decide to withdraw, almost 190 banks are at potential risk. This could lead to impairment to insured depositors. Potentially $300 billion worth of insured deposits are at risk. The head of the Financial Supervisory Commission of Taiwan, Huang Tianmu, said that the regulator will take over as the main overseer of cryptocurrencies in the country. This means that the FSC will be in charge of regulating the crypto industry in Taiwan. On March 20th, Huang spoke to Taiwan's parliament about regulating cryptocurrencies in the Republic of China. He explained that the FSC's crypto regulatory framework will involve important guidelines. These include keeping customer assets separate from company funds and ensuring investor protection. Huang mentioned that the highest administrative body in Taiwan has directed the FSC to oversee payments and transactions in the crypto market. However, he emphasized that the FSC may not regulate other industries like NFTs. Huang mentioned that the FSC will prioritize self-regulation principles within Taiwan's crypto industry. In the meantime, lawmakers in Taiwan plan to establish and authorize a crypto regulatory framework. A preliminary plan proposes placing the regulation of NFTs under the Ministry of Digital Affairs. This announcement comes at a time when Taiwan is dealing with ongoing tensions with China, which considers Taiwan a breakaway province and aims to take control of it. While some jurisdictions in the Asia-Pacific area are crypto-friendly, like Hong Kong and Singapore, China is a major anti-crypto country. In 2021, it implemented a complete ban on crypto. On Sunday, FTX stated that they want to remove any claim that the company's Bahamas arm has over company assets. They claim that the Bahamas arm was an instrument created only to support Sam Bankman-Fried's alleged fraud. FTX also accused the Bahamian authorities of helping Sam evade justice. This move may cause legal and diplomatic tensions to resurface. Now, the courts placed FTX Digital Markets into liquidation on November 10th. The wider corporate group filed for bankruptcy in Delaware on November 11th. This resulted in disputes over who can access centrally held corporate data. The new leadership of FTX filed a legal document on March 19th. This filing requests that the Delaware courts completely remove the role of the Bahamian liquidators. The filing argues that FTX Digital Markets was a legal and economic nullity. Therefore, it does not have any legitimate assets to resolve. No fiat, no cryptocurrency, no intellectual property. According to a filing made by FTX's new leadership, FTX Digital Markets was created and operated as a fraudulent scheme. A scheme that saw $143 million transferred to FTX Digital Market bank accounts. The filing also claims that FTX Digital Markets was not an essential part of the company's operations. Instead, it was a short-term matching service that began in May of 2022. Additionally, the filing states that founder Sam Bankman-Fried had a close relationship with Bahamian law enforcement agencies, including the Prime Minister, the Attorney General, and the Securities Commission. He aimed to use these relationships to minimize his exposure to criminal and civil charges in the case his fraudulent scheme was discovered. Belgium's financial regulator has introduced new laws for cryptocurrency ads. These laws require that ads must be truthful and warn investors about the risks involved. The new laws were announced on Monday and were published in the Official Gazette on Friday. Mass media campaigns promoting digital currencies must now be submitted to the Financial Services and Market Authority 10 days before they're launched. This will allow the regulator to check them and take action if necessary. According to a statement by the Financial Services and Markets Authority, virtual currencies are very popular at the moment, but they're also very risky. They are vulnerable to fraud and IT-related risks, and the prices can fluctuate wildly. Despite this, people still trade in virtual currencies to make money quickly. So, starting on May 17th, the new rules require ads to state that the only guarantee in crypto is risk. Belgium is now joining other European countries like Spain and the UK in regulating publicity campaigns for virtual currencies similar to traditional finance. On April 18th, the European Parliament will have a discussion about the Markets in Crypto Assets Regulation, known as MiCA. This law will bring a crypto licensing system across the European Union. It's a landmark law that's taken a long time to be finalized. The political aspects were completed in June, but there have been several delays in agreeing on the legal text, which needs to be translated into the EU's 24 official languages. The final vote is scheduled to take place on April 19th, the day before the Parliament discussion. Following the MiCA debate, discussions will take place on the Transfer of Funds regulation. This law has caused controversy because it requires crypto providers to verify the identity of their customers. The Transfer of Funds regulation was also provisionally agreed upon back in June. In October, members of Parliament's Economic and Monetary Affairs Committee voted 28-1 in favor of the MiCA legislation, and national diplomats have also supported the plan. The legislation provides crypto companies with a license to operate throughout the EU, but they must meet governance and consumer protection standards. The law also introduces reserve requirements for stablecoins. If the law is approved, it will be published in the EU's official journal and will take effect within 1 to 3 years. The Australia Banking Association has started an investigation into the impact of various factors on the living expenses of Australians. These include the COVID-19 pandemic, global supply chain disruptions, and geopolitical tensions. The ABA hopes to find ways to help Australians cope with the rising cost of living and assess the government's response to this issue. The association recognizes that many Australians will face challenges in adapting to the increased cost of living. While some individuals may find it easier to manage, the ABA acknowledges that most customers will need to adjust their spending habits or use their savings to meet higher mortgage repayments as borrowing rates rise. Refinancing a mortgage is also an option for those struggling to keep up with payments. When citizens switched from a fixed rate to a variable rate mortgage, it put a lot of pressure on banks. This was one of the biggest challenges they faced. The Australian Banking Association is advising customers to take a proactive approach and to make sure they're getting the best possible deal for their banking services. Property rents in Australia have been on the rise. That's because COVID-19 restrictions have been lifted and the market has stabilized. However, citizens who are struggling financially can seek assistance from their banks. This help could include waiving fees and charges, increasing emergency credit limits, and deferring loan repayments. To tackle the issue of inflation, the Reserve Bank of Australia and the Department of the Treasury have been meeting with the executives from Coinbase in private discussions. The focus of these talks have been on the future of cryptocurrency regulation in Australia. Back in February this year, the Australian Treasury tweeted that the token mapping consultation paper was now open for public input. This consultation is part of a larger effort to establish effective regulation for the cryptocurrency industry. The tweet encouraged followers to read the paper and to offer feedback. According to a spokesperson from the Reserve Bank of Australia, Coinbase had a meeting with the RBA's Payments Policy and Financial Stability Departments in mid-March. This meeting was part of the RBA's regular communication with industry stakeholders. On March 20th, OKX informed its Canadian users that they will stop providing services in Canada. They will also prevent new account openings in Canada starting from March 24th. And they cited new regulations as the reason behind the decision. Existing Canadian customers were instructed by OKX to close all open positions by June 22nd. They were also informed that all existing fiat or tokens must be withdrawn by the same date. OKX assured its Canadian customers that their funds would remain safe in their accounts until withdrawal. They also stated that they would be able to withdraw dollars to their linked bank accounts and cryptocurrency to their self-custody wallets or cryptocurrency accounts on other exchanges. According to OKX staff, their withdrawal from Canada is temporary. They said they're currently working with regulators to resolve the issue. They expressed hope to serve Canadian customers again in the future and advised them to stay tuned for further updates. Another exchange, Bittrex Global, also offboarded Canadian customers on July 29, 2022, citing regulatory developments. On February 22nd, the Canadian Securities Administrators published a notice that requires crypto exchanges to sign new legally binding undertakings. This is while they await registration with the regulatory body. Now, one of the provisions in the undertaking has to do with what they're calling value-referenced crypto assets. So basically, there would be a rule against buying these value-referenced crypto assets through crypto contracts without prior written consent of the CSA. However, it appears that the stablecoin USDC has not been affected by this ruling. Currently, all cryptocurrency exchanges operating in Canada must register with Canadian regulators before allowing users to onboard. On June 22, 2022, the Ontario Securities Commission fined 2 cryptocurrency exchanges, Bybit and KuCoin, for millions of dollars. The regulatory body found both exchanges to be guilty of operating as, quote, non-compliant platforms in the country. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, please like, follow, subscribe, leave a rating or a review. And in the meantime, we'll see you tomorrow night.